absolutely quiet with only about 30 points of movement, uh, 30 to 40 points of pips of movement in Euro USD right now. It has moved from 1.0880 intraday low towards 1.0905 possibly. So hardly any major movement that we can see right now. That's the 4-hour chart flashing on your screens. As far as the counts are concerned, we have we have been following since last I think 1 month, more than 1 month now, 13th of Jan, and minute wave 1 and 2 are complete, and extended or an expanded extended wave 3 is underway within the first proposed impulse. All right, and even if we go within the third wave, the third wave is again extending. So at a sub-minute degree, which which probably is looking to complete at 1.11. All right, so the trend is firmly up. There is no change in Euro USD bullish scenario. The only thing which we need to keep in mind and be aware of is that a corrective wave might extend lower towards 1.072550 region, somewhere here. All right, where we have marked it up. All right, so it may drop before reversing to 1.11. That's the only thing, that's the only point we need to consider and be aware of, so that you're not surprised, and in fact we could be prepared to go long if price action drops there. All right, at least partial longs have been initiated around the 850 zone in the portal as well, and uh, much can be added around 1.0750 going further. All right, okay, so that's the story in the Euro USD. As far as the larger degree trend is concerned, it is actually unfolding in the next 5 waves, potentially of the same magnitude of the earlier one. All right, and that could be around 1700 pips to be made from 1.0177, which could take us all the way towards 1.19 or 1.2 basically. Let's see where the price action is taking us or could be taking us. Somewhere over here. Let's also try and take the channel. If we go by this channel line, I think the convergence around 1.19, right, it comes in May, or comes in July, I suppose, July 2025. All right, so it's still at least one quarter or so. And the previous rally, if you look at the time factor of the previous rally, it started October 22 and ended around July 23, which lasted about October, November, December, and almost 10 months. It brings us to from January to October. It could be September again, right? In terms of the price perspective, but you know what? You can see that wave 4 here, unfolded, that it took a lot of time unfolding as an expanded triangle actually. So that was, I mean, considering that time loss, I mean, if there is no wave for consolidation or something, then we could reach even in July. That's what the convergence point is showing. All right, but it's no measure of because time measurements are hardly around 40% maybe successful. Most important is the price measurement with the Fibonacci ratios, equality principle, and stuff like that. All right, so the Fibonacci ratios, even if we try and put the Elliott perspective where we drag it lower towards the second wave, that's going much above 1.2, sir. The simple perspective is taking us towards 1.19, which solves the purpose of equality. Otherwise, it's going much higher than that. All right. Equality plays a role when there is a corrective wave ABC, and corrective waves can take a shape of zigzags. So if it is an ABC zigzag, maybe 1.19 is a good level to target for. But if it's a third wave, then there could be much higher levels. I don't know if the weekly chart is trying to. Yeah, the weekly chart is. It could be targeting 1.12 as well after that entire corrective decline complete. All right. So that's the larger picture for euro on the long side, please. And let's move on to the dollar index now. And that's the daily perspective for the dollar index, five waves down, and a higher degree, followed by a three-wave corrective ABC, and so it's 5-3 complete, which leads to another five-wave decline, possibly of the same magnitude as the earlier one. All right, so kindly be aware of the situation here. It's good to be selling on rallies at all point in time. The only thing we need to be aware of now, because if you're holding from the earlier positions that we took at 110, there's no question about doing anything. You can just keep on holding it and keep on adding it further on retracements. But if you have taken fresh positions around 104 last week, partial shorts were taken and remaining around 104.90, then you got to keep your stop loss at least above 107.50 or 107.60. All right, because we don't want to get stopped out in case of a pullback or retracement extending slightly higher than what we expect. All right, otherwise the dollar index is firmly in the hands of bears, and it's quite possible that it might have resumed lower. If it has resumed lower, the initial targets would be 102 and then followed by 101.57. Mind you, that would complete I think minute wave 3, minute wave 3, and then 4 and 5 to complete the minute impulse. I think this minute wave 3 would complete here. That would be minute wave 3 if the sub-minute third of third is extending. So it's going to be a long way, at least around, because even if we take a hypothetical extension, it could drop all the way towards 96 easy. All right. So the dollar index is firmly placed on the south side. The only thing I would like to request is keep a watch on the 104.90 handle, and 104.90 handle. If prices rally through that mark, then it would be a good idea to add further short positions as well. All right. All right. So that's the story in the dollar index. Maybe we can bring up pound. I think pound is still showing a good amount of resilience by not giving up on the retracement side. It's risen even further, and there's no surprise that pound is heading. It's almost there. I mean, 1.3061. We haven't issued a long call in the portal because it was too high at that point. 2950 is too high. We would like to issue if prices come down towards at least 2800 handle. That would be at least a realistic uh, retracement, even if it's a shallow one. All right. Otherwise, it's going to run away all the way towards 1.3 and possibly 1.32 as well. In fact, it's not going to stop. It's not expected to stop at 1.32. It could go and extend towards 1.34 easily going forward. As far as the trading is concerned, uh, if you have any inclination of buying, the recommendation is absolutely on the long side. And if you went long around the 2950, then kindly place your stop loss around 1.25. The top or termination of wave one. We cannot afford to place anywhere higher than that because we've got to allow some room for a corrective decline just in case if it happens. Well, pound has not produced any corrective declines right after that day, and I remember we were here when we issued a call on the long side. I mean, 11th of February. It was time that we that was the best entry, one of the best entry around 2350s, and this was the first one for us, 1.2250. We kept our stop losses at a break even for a long time, and now it can be shifted to 1.25. All right. Otherwise, the daily chart is already suggesting that pound is heading above 1.34 or 1.34 easily. And the only question is whether whether it's got strength and to 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 push or continue pushing higher from current levels, or is it going to drop lower, pull back, and produce a corrective decline, and then proceed further. All right. So trading point of view, I don't think it's a corrective wave. I think it's already heading towards 1.3050 right now as we speak. But just in case, as we discussed in the euros and the dollar index, if pound reverses from the current price and it drops towards 1.28, that would be a very optimized entry for a potential lower degree wave fall to be bought. All right. Maybe you can keep that in mind, or maybe you can place a limit order as well, just in case if it drops when we are not on the screen. And it's always good to deal with or trade with limit orders in place. That way we don't miss trade. And gold, I think gold has now carved a lower degree wave too. All right, before going there, let's discuss one more time what the wave structure looks like. Now, gold has been in a five-wave rally at minor degree since 1800 levels in October 2022, and within the minor 5 wave rally, it has completed minor 1, 2, 3, and 4, and right now it is within the minor wave 5 higher. So last leg is being unfolded higher. Within the last leg, we might have got wave 1, 2, 3, and 4 as well. Now, whether that wave 4 is complete or not, we will come to know in 1 or 2 days, because if it is complete, we will see some kind of a confirmation uh, in terms of a continued rally, or after dropping towards 2940, the rally might resume. If it happens, wave 4 is complete around 2830. If it doesn't, it would imply that wave 4 might take some time, possibly as an expanded flat, and prices may divert, or prices may reverse towards 2810 mark again. All right, that's the story. That's the larger degree picture. Trading point of view, we have already taken aggressive shots in the portal, but we have refrained from advising to do so, because it was a very aggressive stand that we took in the portal, and it might not be suitable for all traders. So we have suggested mostly to remain on the sidelines and wait for prices to decline at least towards 2940 before we might issue a flip trade, possibly on the long side. 2940 could be a wave 3, or maybe 2 of 3 in the making. All right. 88, so it could be seen as, I think it's still under the purview of a sideways activity, and I don't know if the extensions are taken. The recent extensions might be leading towards 2940 as well. So it's going to be interesting to see if 2940 is met in this cycle, or is it going to just produce a sideways activity and continue higher from here as well. All right. So that's the trade setup for gold right now, and we intend to remain. We suggest to remain flat for now. Possibly we'll issue another trade setup when it's more on the towards the trend and safer trading strategy. Right. All right. As far as the longer degree trend, gold remains on the bullish side towards 3300 possibly. It's already touched the 3000 mark. The next target is around 3030 and 3200 levels. All right, let's move ahead with Bitcoin. Again, the story in Bitcoin is, as I said, all risk assets all are normally converging as their last leg rally remaining, and mostly the story started around the same time. If we go back over here as well, it all started around in November 22. That's around the same time when gold also started to rally. So euro, gold, Bitcoin, they are all started to rally around the same time. So maybe we've all got one more leg left, and because if you look at the structure, minor wave 1, 2, 3, and 4 were complete, and here also minor wave 5 is under production, and possibly minute wave 4 might have just completed here. out of the two scenarios where we suggested it could be wave 1 on the lower side, it could also be wave 4 on the upper side, and there might be wave 5 in, in the in progress. And what is encouraging me to say that is that you've got wave 1 and 2 and again 1 and 2. Now when you see a couple of ones and twos in the making, it normally breaks out as a huge wave 3 rally or a decline, which leads to all-time highs by the time 5 waves are complete. And that's the reason why I'm not really inclined to take profits in Bitcoin, even though we're getting about 2,000 plus or 3,000 points right now after taking longs around the 80,000 mark. All right, so that's the story as we move in the second session for the New York, and we'll think let's have a quick view on the equity markets as well. Remember, we took short positions and we covered them as well. Okay, I think we've got the first impulse wave complete now. Let's go on a hourly chart here. All right, so there you are. The first wave 1, 2, 3, 4, and 5 is complete, and which leads us to believe that okay, the RSI is not coming up. Maybe it needs a refresh. It rather than entering over here, we wait for a corrective decline now. One thing is more or less confirmed, that's as the first impulse is ready. I think let's also have an extension. Yeah, it's almost ready. So let's wait for a corrective decline, which could drag prices lower towards 41,200, and we will be happy to buy at that price, enter at that price. I mean, and let's take it from there. All right. On the long side, it's a counter trend rally. Could be a counter trend. Again, all the risk assets are matching up, mostly matching up. So let's try and go at least a counter trend towards the 61.8%, and if prices turn lower from there, then we can always flip our trades, correct? All right, so we will wait for a corrective decline now, possibly in the next session or tomorrow around New York time. I think we should get an entry on the long side for the Dow Jones at least. All right, so let's bring the current session to a pause now, and we will be back in a few hours to take it further during the Tokyo Sydney overlap. Until that time, as always, thank you for tuning in, and until the next one, as always, please do take care and God bless. Goodbye.